Hi all, welcome back to my channel. I know it's been a very long time, but let's quickly hit it off about how 1st of September went through today. Trust me, it's one of the most eventful days in market presence. Sleep it away, the most where, yeah, let's actually see how the day was totally. So, coming back to that, let me quickly bring up the Nifty and Bank Nifty charts for you. So, uh, first let's run through the Nifty chart. Uh, Right on on Tuesday, before as Wednesday was a holiday yesterday. So Tuesday we saw that there was a very tremendous move actually. The move was like 2.6% from its previous close on Monday, and from 17,400 it hit all the way to 17,760, which was the closing price. And today we see that it's an inside candle basically with a neither the high being broken nor the lows. So we can see that 17450 will be a support for now, and then on the upside, that's yesterday's high, around 17760 would be the resistance. So this is one zone which is crucial for us, and then post that we can again see a in 17 below 17400. That would be a very weak zone, and then followed to all the way we can see at hitting around 17,170 levels. So this is something which is crucial. It's not just that the highs and lows that we are seeing on the screen. It's also about the way over the time that you harness the observations. And these are the crucial levels, and trust me, this is not an easy market that if you're a buyer, definitely it's going to test your patience on a very larger note. So that's about the daily candles, what happened on a broader side. But let's quickly see about what happened on the intraday. So if you see on the right side, we have 5 minutes chart. Let me actually do that for 15 minutes. You have a pretty good picture. So you can see that we opened on a very bearish note compared to what Tuesday was closed on Tuesday's closing. So we opened around 17,520 levels, hit a low of 17,480 approximately, and then from there we sort of banked all the way up to 17,700 approximately. From there, just took a U-turn. Then all the way we hit almost, actually hit just a day's low, and then closed around 17,560. And today being the expiry, which is the first week of expiry of September, day one itself, the September series, the day one itself. So we can see that we had a very volatile market, and it was a clear sign of premium decay on the upside and downside. And put writers sort of actually were trouble in the morning itself, but then if whoever held their 40 sort of came out of that wild gap down that we had from Tuesday. So, but on an intraday basis, that was a very range bound within 17,500 to 17,700. It actually remained in that zone if you see on hindsight. But then when you're on live position, it's something actually different with a very wild that's kicking in. So unless you were off the range and sort of sticking with the OTM options on the call side and put side, it was something which was giving you sort of a sign of mini heartache and all if you do not trust your chart and the process. So that was how today went through completely, and let's actually quickly run through the open interest about how it panned out. So if you see, the interest was pretty stable. 17,500 P sort of remained very flat uh, towards towards the end also. So it sort of remained with 2.2 million odd. So just give me a yes. Uh, let's see the next week expire. move itself, then goes. Okay, so we have 17,500 put and 17,600 call of next week actually, and you can see how already sprang up all the way from 900,000 to 1.7, 1.2 million approximately. So that's an addition of a million call writers at 17,600. You can see the huge resistance that's being formed around that level. Now the put side, you can see that 17,500 sort of held its forte, although it dipped from the high of 2.4 million, 2.5 million put writers to 2.2 million put writers. That's just a 300,000 writers coming down, but you can see the heavy call writing that has increased on the other side. So that's something which is sort of being a cautionary note at a macro level. But again, this today is just the first. This is very first series of expiry and also the first day of second week of expiry. So it is something we can just not rely on the uh, call writers or put writers present or holding their positions. We need to take a call about on Monday and Tuesday depending on the scenarios present in global market. So that's on that. But let's also see where SGX Nifty is currently trading around. So it's around 17,540, and that's future price. So let's see Nifty future where it is. Where was the closing of Nifty September future? 17,611 points. So that's approximately 70 odd points of a gap down scenario that we could see for tomorrow morning, provided today's night is still at 70 point lows. But tomorrow, let's take a call about how it would trend on the morning video tomorrow. For now, let's quickly jump back to Bank Nifty. Yes. So compared to Nifty, we saw a very wild Bank Nifty actually. Also, yesterday wasn't a very simple day for Bank Nifty either. We saw Nifty going up by 2.6%, while Bank Nifty going up by 3.3%, which is significantly high. And in similar range, we saw about how Bank Nifty behaved today. It dipped all the way to 38,800 levels at the opening tick from 39 to 50. That's the high. Then all the way it sprang to 39,670 700 zone. From there, you could see a gradual dip on hindsight to 39,000, 38,900, 39,000 levels. But then, although you could see just on 15 minutes time frame, when you actually on read at a 5 minutes time frame or something, this looks very, very harsh on a buyer side. Probably a call seller wouldn't mind actually today, because if you had sold 38,600, 39,600 or 39,700 call in the morning and stuck with the day higher stop loss, pretty much kept trailing your stop loss, I don't see a point of being worried. It was that kind of expiry. But then again, the uneven wicks sort of push the premiums onto the positions that you were holding. So that would be a keen note of worry for the traders who had their positions. So that's about on Bank Nifty chart actually. So again, like Nifty, if we sort of try to draw levels, so initial support lies around 38,500, followed by a downside of 37,940 odd levels, which is again 38,000 levels, which would be very crucial. 38,060 odd levels, and then the other side, the upside 39,520 would be a key support area, 39,540 odd levels, which is sort of you could take just 39,600. Nevertheless, 39,540, 39,600. Bank Nifty plus or minus of 50 points is something which is very normal. You could see on a second candle or minute candle actually without any warning. So on the upside, that would be the initial resistance, and you can actually go short with that. And we already have 39,770 odd levels. That could be on a daily closing basis, which you could keep as your short position stop loss with a target of 13,500 approximately. Again, do your own due diligence. This is based on my experience completely. So that's about that on Bank Nifty, and it was a similar scenario for Bank Nifty weekly. Oh, I click that up. Just give it a second until it loads. Have it on screen. So a similar scenario happens. So we see almost around 10:30 today morning at 684,000 call writers present, who ran all the way to 1.2, 1.1, 1.15 billion towards the close of the day. That's again 100% increase approximately on 39,500 call writing, and we could actually see the way 39,500 and 600 acted as resistance for Bank Nifty. On the put side, although from 640,000 it shot up to 840,000 levels, 39,000 sort of acted as a very good support again on the downside on intraday basis. Let's see about how it works tomorrow, and you can take a call for the weekend, or how about to ignore it on the weekend and sort of recreate positions for the next week. So that's a very quick note about Nifty and Bank Nifty. And if we have to see for USDINR, let's actually run through this. So there was not much of a currency depreciation today. Uh, let's see. So we sort of opened on a very high note, while today approximately 80.12. Then sort of sprang back to 79.5. That's an appreciation in INR by approximately 70 odd paise, 60 odd paise. Yeah, 60 odd paise. And that sort of we close somewhere between the high and the lows of the day. And tomorrow is the expiry of US INR options and weekly future. So that's the INR 80 at 2nd September. 80 they close. It's 41 paise and 70 paise. That's approximately a premium 30 paise to 35 paise. We actually see the spot price of USD compared to the future that's on the screen. So again, with 79.5 as primary support and then 80 as primary resistance, tomorrow could be a very range bound expiry for USD. So you could still play both sides for a premium decay or a premium gain of approximately 10 to 15 paise. Nevertheless, then that's about that. We could get a very slim, the non-trending USD expiry tomorrow. So on that note, let me wrap up today's session or today's recap about how the market reheat, and let's actually come back tomorrow morning to see how the market might pan out the day on 2nd September. That's about it, and have a good night, and that's from my end. See you. Bye.